Good evening viewers, welcome back to your favorite research network, Live Tips. We will have a quick update on what is happening in the currency market with Mr. Joy, and later during the session we will discuss the commodities market with myself, Navneet, as the US market is set to open in a few hours time. So welcome back, Mr. Joy. So Mr. Joy, how is Swiss franc trading in the afternoon session, especially after the Asian trading session?
Well, the Switzerland franc jumped to a record high against the euro and the dollar as investors bet its economy is set to outperform the eurozone and US next year. Over the year, the franc has strengthened 8.4% according to the Bloomberg Correlation Weighted Currency Index. The Swiss franc continued to benefit from ongoing doubts about developments in Europe and concerns over how the debt crisis in Europe might pan out next year.
Okay.
So we are expecting that the Swiss franc to continue its bullish trend for some more time till the European crisis come to an end.
Okay, so the current uncertainty in the eurozone is helping in pushing more investment into the Swiss franc. So how is Swiss franc trading against euro right now?
The Switzerland currency is appreciated as much as 0.8% to 1.2402 per euro, reaching a record of 1.2439 on December 22nd. Before trading at 1.2443 at 8:82 AM in London today. Against the dollar, it reached an all-time high strength of 93.74 cents before trading at 93.9 cents today.
Okay.
So we are seeing the bullish trend continuing against the dollar as well.
Okay. How is Australian currency trading in the afternoon trading session?
Well, the Australian dollar climbed to the strongest since it was freely floated. Then paired gains before data today forecast to show US initial job claims decline. The Australian dollar was at 1.0171 from 1.0179 yesterday.
Okay.
So the market is keenly waiting the US jobless claim data to come.
Okay, if the US jobless claim data comes better than expected, probably we might see correction continuing in Australian dollar. So how is the South Korean won trading today?
Well, the South Korean won gained the most in 2 months after the central bank forecast. The national current account surplus will widen this month. South Korea's industrial output expanded 10.4% in November from a year earlier. The won rose 1% to more since October 6 to 1134.85 per dollar. So all the economic data coming from the South Korean side is positive.
So Mr. Choi, how is South Korean won trading today?
Well, the South Koreans won gained the most in 2 months after the central bank forecast. The nation's current account surplus will widen this month. So the South Korean industrial output expanded 10.4% in November from a year earlier. The won rose 1%, that's the most since October 6 to 1134.85 per dollar. So all the economic data coming from the South Korea side is positive for the currency.
Okay, fine. So what about Japanese currency?
Well, the Japanese currency is gained for the 9th day versus the dollar. Its longest winning streak since October 2004. After the People's Bank of China set the reference rate for the yuan stronger for an 8th day. The value of Japanese export to China, Japan's biggest market, advanced 18.3% in November from a year earlier, compared with the 17.6% increase in October. So the exporting data coming from Japanese market is quite positive for the currency as well.
Okay, also we have the positive industrial data also
data
coming in. Yeah, right. So how is the dollar index trading today?
Well, the dollar index, which used to track the greenback against the currencies of 6 US trading partners, slipped to 0.2% to 79.662.
Okay.
So we have seen a minor corrections in the dollar index today.
Okay, that might be probably ahead of the US data releases which comes in the US trading session today. So what are the key technical levels to watch out for major currency pairs today?
Yes, the euro vs USD, the support seen at 1.3211 and then 1.3158. The rest for the currency is at 1.3274 and then 1.3357. Japanese yen vs USD, the first support is seen at 81.08 and then 80.83. Resistance for the Japanese currency is at 81.79 and then 82.37. GBP vs USD, the first support is at 1.5469. If it breaks, the next support is at 1.5394.
Okay.
The rest for the currency is at 1.5523 and then 1.5577. Australian dollar vs USD, the first support is at 1.0104 and then 1.0046. The resistance for the currency is at 1.0173 and then 1.0230. So these all are the major trading levels for the currencies today.
Okay. So viewers, watch out for these key levels for trading in today's market. So thank you, Mr. Joy, for your valuable insights. Stay tuned, viewers. We'll be discussing the commodities market after this commercial.
Welcome back, viewers. We'll discuss the commodities market with Mr. Navid. Welcome, Mr. Navid.
Thank you, sir.
So now, can you throw some lights on the major economic data releases for the day?
Yeah. Coming to the Asian trading session, we had the Chinese HSBC manufacturing PMI data, which fell to 54.40, below the previous value 55.30. So that was a disappointing data which hit the market early in the morning itself.
Okay.
And we saw some consolidation happening in the base metals after this data release. And we saw some correction also coming in during the European trading session.
So do you think that the trend will continue for next trading section?
Probably it is a small aberration in the data list which came in, and that was mainly because of the monetary policy changes which the Chinese central bank took during the last couple of weeks, of like increasing the key lending rates and all. So that is actually showing the effect, and the market will be certainly looking for other perspective also apart from these, like the inflation numbers which is coming in from the China, and also the elevated inventory levels that is building up. We have seen a 26% drop in the inventory levels in the global warehouses, so that will also supporting factor of base metals. So probably on a short-term perspective, probably it will be having a slightly negative impact, but long-term bullishness seems to be intact. Then we had there was no major data releases coming in from the Eurozone area. Coming to the US trading session, we have the US unemployment claims numbers expected to decline to 416K as against the previous value of 420K. US Chicago PMI numbers expected to drop to 61.2 as against the previous value of 62.50. So we have some contradicting data releases which is expected. We have a positive expectation on unemployment claims from the US, and we have a negative expectation on Chicago PMI numbers. So that will be an interesting market to watch out for. So the market will be keenly following for the next data release, that is a US pending home sales number on a month-on-month basis, which is expected to increase at a slower pace of 2% as against the previous increase of 10.4%. So any surprises in the pending home sales numbers will be the major drivers for today's market. Then coming into the energy trading, we have the US natural gas storage figures, which is expected to drop by 171 as against the previous weekly decline of 184. So mainly market participants will be keenly following this natural gas inventory levels today. We have the US crude oil inventory levels, which is expected to drop by 2.8 million barrels as against the previous weekly drop of 5.3 million barrels. So these two data are very important for today's energy traders.
Okay, so you are expecting the market to be volatile related to the economic data?
Oh yes, we have too much data that is coming in today after the Christmas holidays.
Okay.
So we'll be seeing a lot of volatility happening in the currency and also in the commodities market.
So what do you suggest to the clients? Is it advisable for them to exit the positions and wait for the data to come in? What do you say?
Yeah, risky traders can always take a position taking in consideration of the expectations of the data release which we have told right now. But for a long-term perspective traders, probably they will have to wait for the data release to actually come in, so that they can take a long-term position in the market.
Okay, so it would be a risky trade for today's section.
Yeah, especially people who are willing to ride the volatility can trade today.
Okay. So what are the key supports and resistance levels to look out for commerce trading section? Let's start with gold.
Yeah. Gold witnessed a consolidation pattern emerging in the technical charts during the Asian trading session. $1415.35 will be the crucial resistance level to watch out for during intraday trading. A successful breakout above this key resistance level could see the prices testing the $1421 levels on the upside. $1410.80 will be the key support level to watch out for today's intraday trading. A successful breakdown below this key level could see the prices testing the 1401.50 levels on the downside, which is a very good support level. It is a psychological support level because it's 1400 level. RSI is hovering around the 49.30 level set of the COMEX trading session today.
So gold is trading very near to the all-time high of 1431. So do you advise your clients to book profit, or can they hold them for a long-term basis?
Yeah, definitely the clients can hold on to that for a long-term basis because they're expecting a target of $1,600 on the upside. Okay. But that might be coming in during the next first quarter of 2011. So probably long-term clients can still hold on to the positions, and short-term players can definitely book some profits at the key resistance levels.
Okay. So what do you have to say about the silver?
Silver have been trading in the bullish channel during Asian trading session. $30.62, which is the lower band of the bullish channel, will be the key support level for the commodity prices to watch out for. A successful breakdown below this level could see the prices testing the $30.15 levels on the downside. On the contrary, $30.96 will be acting as a very good resistance because that is the upper band of the bullish channel. RSI is hovering around the overbought territories of 70 levels. So probably if there is a positive data that is coming in from the US front, probably we will be seeing some correction happening in silver prices from the key resistance levels.
Okay, fine. So, and coming to the crude, what is the trend that is shaping up the crude market?
Yeah. Crude oil have been witnessing a consolidation pattern on the technical charts. $91.50 will be the key resistance level to watch out for prices and may show a bullish breakout above this level. $93 will be the next level to watch out for in case of a confirmed breakout. $90.92 will be the key support level to watch out for, as a convincing breakdown below this level could see the prices testing the $90 level on the downside. Again, that is a very good psychological support level for the market. $89.50 will be acting as a medium term support level for the market. So any fallback to this level could see further buying interest coming into the commodity complex. RSI is trailing below the 20-day moving average level of 45.36 in the hourly charts.
Okay, so what is your take on crude for 2011? Do you suggest this as a investable asset for clients?
Yeah, definitely. We have been seeing a lot of fundamental bullishness coming into the crude oil complex. Especially, it is expected that the Asian economies will be having a better economic growth in the 2011, and that will be definitely supporting the demand side of crude oil.
Okay.
Also, US economy is also witnessing some recovery that is happening, and because if you analyze economic data which came in during the month of December have been very positive. So that will be also acting as a very good supporting factor for crude oil. And also in the supply front, we have seen that the OPEC will not be increasing the production quotas until the crude oil trades above the 100 levels. So that is also a supporting factor for crude oil prices, which can because commodity prices test the $100 mark.
So you're keen to be bullish on crude as well?
Yeah, we are expecting the crude to trade in the range of $93 to $95 in the 2011, and an average rate of $93.
Okay, fine. So what about natural gas? Are we seeing any good volume build-up happening in natural gas?
Natural gas managed to hold on above the key 40-day simple moving average support level of $4.26 during yesterday's NYMEX trading session. This would be a good support level to watch out for today's intraday trading. A breach below this level with condensing volumes could see the prices testing the key support level of $4.01 on the downside. A supportive inventory data release could see the prices testing the $4.64 levels on the upside. RSI is hovering around the 53.29 level side of the NYMEX trading session. So traders will be keenly watching out for the inventory data release for the cues.
Okay, so what do you have to say about the copper?
Copper witnessed buying interest continuing as it broke above the key resistance level of $433.50 during the Asian trading session. For $41 will be the key intraday resistance level to watch out for during the COMEX trading session. $428.90 will be acting as a good immediate support resistance level for the prices. And a successful breakdown below could see the prices in the $423.75 on the downside. A fallback to this level could see can be viewed as a very good opportunity to take fresh long positions in the commodity. RSI is hovering around the overbought territories of 76.05. So any selling pressure coming to the market can be considered as a very good buying opportunity.
Okay, fine. So for today, the market will be keenly watching the US jobless claim data to come in.
Yeah. Exactly, the US jobless claim numbers and the pending home sales data will be the keenly watched, as this will be setting the tone for the US dollar index movement, and that will be acting as a very good positive or negative cues for the commodity market. So we expect a lot of volatility in today's market.
So thank you, Navini, for your valuable updates.
Welcome.
So that's all for now. US will be back with more news updates about financial markets tomorrow. Till then, this is Joy saying goodbye, Mr. Navneet.